Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1156A, and today's date is December 19th, 2016, and the title of the episode is The Control Collapse Can't Be Stopped Even If Trump Tries. Let's get into the economic collapse financial news. Now, we are continually seeing more and more economic indicators pointing to a collapse of the system. I mean, right now, when we've been following and tracking all the economic indicators and we're looking at different sectors, we are seeing that we are in a recession right now. If we go back in time to 2008, prior to October where the market came down, leading up to that point, the country was in a recession. Now, I don't know how many people can remember back to that time period, but many people during the summer months in June, July, or even going back further to the beginning of the year of 2008, no one thought we were in a recession. Everyone thought that everything was fine, that the economy was fine. Not until October, when the market came down, did people start scratching their heads going, something's wrong here. And then we heard bailouts, and then we heard quantitative easing. Then after a couple months, they went back and said, yes, we've been in a recession since this period. What we're doing right now is we're living it. We are tracking the collapse. We're inside of the collapse, and we're looking at it and seeing how it's forming. And we've been watching and recording all of this information. So later on, we can look at it and say, see, this is how they do it. This is the procedure on what they do. Now, maybe the next time, hopefully there isn't a next time, we can say, okay, we know exactly what they're doing. We've seen this before, or something very similar. And this is why we look back in history to see exactly what these people do and how to track it and how to see and how to look at all the evidence and say, you know something? They use the stock market, they manipulate unemployment, they manipulate GDP, they manipulate pretty much everything. And when we look at the other economic data that they don't really report on, we can see the big differences of how the economy is rapidly deteriorating. I mean, market reported that in December, services PMI dropped by 54.6 to a 3-month low of 53.4, missing expectations of 55.2. And what we're seeing right now is that manufacturing, it popped up a little bit, but this is the holiday season. We saw the Baltic Dry Index pop up a little bit for the holiday season. It's dropping right now. But what's happening is, after this holiday season, everything's going to deteriorate very, very quickly. Everything's been pumped up right now. Everything's been manipulated to make us believe that we're in this type of recovery. Now, CEOs, they are beginning to warn of the damage of the US dollar, that it's strengthening. And they're saying this is going to be a huge problem because the market is about to wake up to something really bad. And that something is the fact that the US dollar, the strength of the US dollar right now, is going to crush corporate profits in 2017. And companies begin to issue guidance for the results during the last week of the quarter. So the warnings are about to start hitting. And we're already starting to see some of these warnings. Safra Catz is the CEO of Oracle. And this is a $160 billion tech company. And she just issued a major warning of what's coming this way. This quarter, the effects of currency movement were more than what I had included in my guidance, mostly because of the strengthening US dollar and after recent elections in US and Europe, resulting in currency headwind of about 1% in total revenue, 2% in some revenue categories, and 1 penny to EPS. Well, there are problems ahead. Fortune 500 CEO warning that the US dollar strength is already going to shave 1% off the revenues. We are seeing different CEOs already out there telling us that their revenues are going to be much lower. Coca-Cola Restoration Hardware, and other companies are already warning about the impact of the US dollar at this point. And this is happening at a time when investors are record bullish on stocks. This is not going to turn out very well as we move into 2017. Things are going to rapidly decline. And think about it. After the holiday season, when all the information comes out and the holiday purchasing data comes out, and they find out that it was a total disaster, because we're already seeing it because we went through Black Friday, Cyber Monday, and we already had part of the retail numbers for November. They were awful. This is a holiday season. This is the point where stores want to make all their sales so they can survive the rest of the year. If they can't do it now, they're done. And this is what happened to the years previous to this year. They couldn't do it. And we're going to see stores shut down. We're going to see individuals unemployed. Now, out in India, Jayant Bhandare warns that there are clear signs that in a very convoluted way, possession for gold for investment purposes will be made illegal in India. He discusses India's attempts to create a cashless society and why precious metals and geographical diversification are the most viable options investors around the world, not just in India, should be taking right now. He says the situation is getting worse by the day. People are desperate. And we can see these are test cases that the central bankers are using. And we can see there are many black swans right now ready to bring this whole entire system down. Now, this is what the central bankers are most worried about. They don't want a black swan to occur. They don't want something out of left field, because if this does happen, they're not controlling the demolition. And we see Italy right now is scrambling to conclude a private sector rescue of Monte dei Paschi. They're hoping to raise about 5 billion euros in the form a share sale to anchor retail investors, while at the same time the bank is undergoing a debt for equity swap. And Reuters was out there reporting that Italy's cabinet will meet later today, Monday, to authorize an increase to the national debt to cover the cost of saving Monte dei Paschi should a public bailout be unavoidable. And they're not just going to do it for Monte dei Paschi, they're going to do it for other ailing banks. Now, if Monte dei Paschi fails to find buyers for its shares, well, it looks like the Italian bank, the whole entire Italian bank industry, is going to be bailed out in one way or another. The worst case scenario, should the private bailout fail, a state rescue would require many investors, including ordinary Italians, to bear the losses and would risk provoking a political backlash. So we have Deutsche Bank, which has a huge patch on it, keeping it stable right now. And then we have the Italian banks, which are a complete disaster. And of course, what they're going to do is they're going to try to keep these banks propped up long enough for them to bring down the economy. We see the IMF head, Christine Lagarde. She was convicted of negligence. And don't worry, everyone. She's going to face no jail time. Bankers don't go to jail, except if you're in Iceland. Now, what we're seeing here is the entire system. It is prepped and readied to come down most likely in 2017. Now, we're looking at the economic indicators. We're looking at what has been going on. And we can see right now that this, of course, is not set in stone. But we can see from everything that we're looking at, they are prepping and they're creating this illusion that's bigger than life, that the economy is doing absolutely fantastic. And if you notice in the corporate media, they're continually calling it the Trump effect. Oh, because of Trump being elected, the economy's doing better. It's the stock market's rising. Now think about it. They're putting this idea out there, and when the economy falls, they're going to say, see, everything fell apart because of Trump. He brought it up, and the whole thing just fell completely down. And what we're seeing right now from all the economic indicators is that this economy is already in a recession. It is collapsing. And even when Trump is sworn in January, if he makes it that far, they will wait most likely a couple of months, let him start putting his economic policies into the system, and they are going to make the call to bring the system down. Now, there are other factors that could happen during this period of time. Remember, it's not always set in stone. I mean, if you go back to 2015 or 2014, you would have thought, whoa, Assad is done for. The Islamic State has most of Syria. And then all of a sudden, Russia stepped in, and that completely turned the whole thing around. I mean, if you listen to the corporate media, you would have thought that Clinton was already elected president, which they thought was really going to happen. But that didn't happen. So their plans always don't work. So we know that they already have the green light. The Fed raised the interest rate by 25 basis points, while the rest of the world is in negative territory. And it seems right now, no matter what Trump does, he's not going to be able to turn this economy around. This is like a big ship, and we're starting to steer it in a different direction. And he can't steer it too quickly because it doesn't work that way. You just can't do it. There's not enough thrust. And the amount of debt around the world and here in the United States, well, it's making it very difficult to move the ship. So what they're going to do is they're going to bring this system down. They're going to blame it on Trump. And they just don't want to blame it on Trump. They want to make sure that there's an event. They want to make sure that we get into war. And we see right now that this whole system is primed and ready to come down whenever they want. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.